All right, what's going on, everybody? Today is Wednesday, February 19th. We had, I think, FOMC minutes today, so there was a lot of crazy price action. So I kind of want to go over the price action today. I thought there was a couple A-plus setups that presented itself, and you can probably learn a thing or two from today's class. So last week I went over some of the what I look for in trades, right? Having a bias and how to enter a trade. And I was doing it in real time on Friday, which was a great example. I think it might be right here Friday. So we had some pretty good price action on Friday. But what I look for to enter a trade, first thing is you want to go to the bigger time frame. So I'll go over the bigger time frame later because we are on replay mode. But basically, when I'm looking at a trade, let's just take a look at Friday's price action. This is in the morning. What I always say is you need some type of liquidity sweep in order for price to change directions. And when the liquidity sweeps in the opposing direction, so you could target the bias. So let's say you're bullish, but you see a sweep at a sell side sweep, right? So let me just draw it out for you. So we got price going up. This is an uptrend. So in order to catch the trend, what we would want to see is some type of sweep in order to take us to where we want to go. So even though that this is a lower low than this one, we are targeting internal sell side sweeps. This is a sweep. And another sweep is right here. So usually when this happens, this will confirm your bias. All right, I'm bullish, but I need price to dip in order to get in because you don't want to get in up here. You would prefer to get in down here. And that is what is called a discount, right? So we have a fib. Let's see if I have the PD array, right? Anything above, anything in red is considered a premium, and you don't want to be getting your entries in a premium. You want it price to drop down into green, which is considered, what is this? What is this, 50? Why is it so dark? You want it to be considered a discount, right? Premium discount. So that's why people use the Fibonacci. And there's all these different numbers inside, but the ones I like to look for is just 0, 50, and 1, the 50 fib, right? You can put this Fibonacci in the ranges, right? So we have a range up here to here. This is the range. You can use the fib for fair value gaps. So if I have a fair value gap right here, let's say the fair value gap right here, and I have a fair value gap right here, right? This is the gap. This wasn't the greatest example. Let's use this one right here. Right here to right here. You see price is coming down to some sort of discount in the fib, inside the fair value gap. So this is called a 50 fib or consequent encroachment of the fair value gap. So you could do it on the range from highs to lows. You could do it in the fair value gaps, or you could do it for individual candles as well. All right. So if you want to have a candle, well, this is a smaller time frame, but this is an example. Let's just try to give you an example real quick. We have this big candle right here, and we're going to extend it through. So just this candle alone, this candle from this high, this low, once this 50% is broken, we should expect, not all the time, but this is a confluence, one thing you could add to your bias, right? If we have a sweep up here, that changes direction. If we have the Fibonacci on this individual candle and it breaks 50% of it and closes, well, this one just went directly, which you should anticipate for price to take out this low right here. Okay, so that's just 3 ways I use the fib tool while trading. But to go back to what I was saying earlier, is that when we have price returning, like I said earlier right here, we want price to come down and dip, and some type of dip is either a liquidity sweep right here. This is a low, swing low, a sweep, and then we had a lower low here actually. We had this low, and then this one got swept. So it's the same type of setup, right? We had a break. Our bias is that we're in an uptrend, and we look for a sweep here or here into some type of support, which is a fair value gap on a bigger time frame, this blue zone, which gives us our bias, so where we can target our highs. So this would be a high right here. And you can see this one got hit, right? So, and inside of here, it's fractal. So we look for the same thing. We look for some type of sweep in order to get us in our position. So this was one of the trades that I mentioned, I think we took, or no, I was just showing on Friday. Do we have some type of support? Do we have some type of sweep? Right, we have some type of support here. I don't want to get too into detail about what an order block is, but this is similar to some type of support. We have a support right here, order block, for example, and we have a liquidity sweep. So we have all these low hanging liquidity, right? Low hanging fruit, and we get a sweep opposite of where the trend is. We're going up. So we want to see a sell side sweep in order to target highs, right? And we go straight to the highs. Some people like to say it's just like a trend line. Some people say this is a pattern, but at every pattern that you study, if you're studying a bull flag, for example, a bull flag's composition is that we have lower lows and lower highs. So if you trade patterns, we have lower low, lower high, and then this is where we get our breakout to target our highs, okay? But if you trade like ICT concepts, then we just look for, oops, and we look for some type of liquidity sweep inside a support that correlates with the bigger time frame trend, which is up, right? We're breaking up, created a fair value gap right here, same thing. And over here, you can see bull flag again. Every time you see a bull flag, a healthy bull flag is that we have some type of, if you trade ICT, we have a fair value gap right here. But if you trade patterns, we have a trend line and we have lower lows, right? Lower lows. It may not be the prettiest, but this is a bull flag. Bull flag composition, lower highs, lower lows after displacing above a previous high range. So we break out. And at the same time, what I mentioned earlier is that we look for where we got our breakout from down here to up here. A bull flag, a healthy bull flag, is that we break out of the highs. We have corrective activity, which is a pullback into a bullish fair value gap. And what do we see here? We get a bounce on support and we get a continuation of the trend. So when people talk about trading with the trend, this is what they mean. Okay. Does that make sense? Can I get some ones in the chat if that makes sense? Thank you, thank you. Katie, ones. Makes sense to you? Memo. Appreciate it, appreciate it. Okay, so this is basically what you want to always look for when you see a trend. Okay. So let's take a look at today's price action. It was a little tricky at the beginning, but once we started getting a little bit a volume, oops, let's get this part deleted. At the beginning of every week, I always mark out our opening price. So if you go to the weekly open, this is where we opened. So let me just show you. This is where I don't know why it looks like this on the smaller time frame. On the bigger time frame, I believe this is where we opened. If not, it should be down here. Let me just mark out 2. So when I switch, sometimes when you go to change the time frames, they do this. I don't know why. But open, and if it's a green candle, that means we started here and we closed here. Okay. I'll have to take a second look after I get out of replay mode. But you can see price came back down. There's always a wick on both sides of every candle. So if you look at this candle, there's a wick up here and there's a wick down here. So this is where we open. This is where we open. And then when price came down, the weekly, this is a wick on the weekly candle. So this is a new wick on Sunday night. right? Futures open Sunday night. The options, SPY, everything opens on Monday morning, but futures opens the day before. So right here, we have this little wick right here, and then we push up. So if we're looking at the weekly, this is basically how this candle looks like. So we open right here. We have this wick come down to here, and then we expanded. So we pushed up, came down here, and then we expanded up. So basically, it's back where I found it. There. So basically, this is how the candle looks like, right? Push down, push up. So that's why I always mark out the weekly open. We have a weekly open right here. And so when price taps in, these are just wicks because our body started right here. So if it's above here, it's a green candle. If it's below here, the weekly is red. Okay. So same thing again right here. We got another somewhat of a bull flag. All right. We have a trend line. This is Sunday. And then we have some type of sweep that makes price change direction. So we have a swing low right here. Oops. And you see how this is what makes price change direction, right? For the on face value, because there's SMTs, so ES goes up and NQ goes down, then you don't need this. But at face value, in order for price to change directions healthy, we need to take care of everything we need down here, which is liquidity. We sweep liquidity. So what happens? This is sell side. We look for buy side liquidity. So until these are swept, this is going to be the target, right? So once you start making higher lows, higher lows, higher lows, this is going to be the target. And while you're establishing the trend, all right, we are in an uptrend. We finally broke out of this high. So we're making higher highs. We look for the higher low. So as long as it's above here, these are all higher lows. So the higher low that you want to look for is some type of liquidity sweep, whether it be in a fair value gap. Oops. If you see like this, and we have a low, higher low, then if it tapped here, then this would have been your entry for longs. However, it didn't give you the entry for longs because we never tapped into this fair value gap. Missed it by a couple points, right? But sometimes that happens. But in theory, what I was talking about earlier is that we need a sweep in order to get us to the opposite direction, the new target. So if we came down here, tapped it, this would have swept this, and that would have been an A+ setup. Okay, this happened at what, 21:55? That's like, this is a late at night, but price action still respects liquidity, fair value gaps at all times of the day, right? There might not be volume, but that's what we want to look for always. So let's go into today's price action to get a better idea, right? Right here is 6:15 on Pacific time. So this is 9:30 your time. If you're in the East Coast, I gotta wake up early, but we get, this is what, 5 minutes? This is 6:30, okay? So right here, we had FOMC minutes too, so that's why there's a little bit of volatility. But what are we looking for, right? What are we looking for in order for price to change direction? But first thing, we got to figure out, where is the trend, right? We're in an uptrend. So if we are in an uptrend, I would like this to be a target. Relative equal highs, liquidity that was never swept. All right, and we got to go lower ones right here maybe. All right, so if my assessment in the morning was that if we inverts some type of fair value gap, right, because we had a sweep right here early, if we inverse fair value gap up, this is how I created my bias. I don't think it worked out right in the morning though, but because we had sweeps on both sides, right? We swept up here to come down and we swept down here to come up. So there was really no direction, especially being in the middle of here and here. because if we break lower, here should be the target unless we sweep here and bounce up. And if we bounce up, and we start making higher lows, then we target here and we target here, and all these are highs. These are targets, right? Target here, target here, target here. Okay, so let's just see how things played out. So it looks like we were going lower, right? But there's always some type of manipulation, right? We are at the weekly open. So as long as we're here, this is now a red weekly candle on a Wednesday. Okay, we're looking for displacement. We're looking for some type of manipulation. We're looking for some type of support. All right, where are we headed? So we have a fair value gap right here. This is what I'm looking for during this time. And then I'm marking this out in real time as it's happening. Like, could this be a target? Could that be a target? But we are in a uptrend on the bigger time frame, right? Uptrend on a bigger time frame. So when price kind of manipulates right here, one thing's now I'm marking now is that we bounced off this fair value gap. We didn't sweep here. So this could be that manipulation, but we also have another bearish fair value gap. So if the trend is down, then we should expect bearish fair value gaps to be respected, right? So that means that we are coming high to low, creating the fair value gap, right? So if there's a fair value gap coming up like this is blue. So this is down to up, down to up. So this is bullish fair value gap. If we going down right here to here, now this is a bearish fair value gap. Okay. So this is actually supposed to be red because this is bearish. Bearish fair value gap. Okay. So we have bearish and bullish. So we're in a bullish fair value gap, respecting a bearish fair value gap, but this is not at a discount of this range. So this is not really a good entry right at open. So what we want to see? We want to see if this bearish fair value gap holds, and look at it does not hold. So when this happens, this happened at 7:30, right? 1 hour after market opens, then this is called an inverse fair value gap. So now this is violated. Let's see if this holds, and if this holds, then what do we do, right? If this holds, that means that the trend potentially has changed. And what do we look for? We look for targets, but we need some type of liquidity sweep here in order to get us higher, or if we see us break back down, then there's no trade. Okay. So let's see what happens. All right, we did respect this right here. We did come back right here, right? And so right here, what do we notice right here? We have the weekly open. We came down. Remember, anything below here is just a wick of the weekly, and we push back up. So this was what was on here. So basically, when this is happening, we're dancing around. We get a sweep right here. Where did I enter my trade? Let's just keep going. I think this gave us another opportunity to go long, right? But as this is happening, you guys notice how after we inverted this bearish fair value gap, held this bullish fair value gap, we made a new high. We are now changing order flow. So what does that mean? If we are in an uptrend, we look for, oh yeah, I just missed it right here. We look for bullish fair value gaps that go down to up. We look for bullish fair value gaps that go down to up after this got inverted. And what do we do in order for price? We enter for price to target our highs if we're bullish, right? We look for price to come down at a discount, and we look for price to sweep. So just as I showed you on right here, right? Once we break up, our bias is bullish. We look for a sweep, right, of here into some type of support in order to take us to here. So this happened right here. We came up, we dumped, we came up. This is called an internal sweep to bait people, right? We had a sweep, changes direction, but guess what? We swept right back and held this bullish fair value gap. So bullish fair value, bullish order flow is holding, right? Bullish holding, nothing's inverse. If it was inversed, then I would change this to this, right? It's like this got inverse. This is bearish, got ran through inverse. Now that this resistance is now support, right? This is once it breaks below, resistance, support. This is breaks out, support. It does not turn into resistance. So if we broke below this, then I would expect us to come down and take out this target right here. But since we didn't, this is just corrective activity. Let's see if this falls within the range, right? We had a break of structure right here. Let's take it from this to this. Look at that. It takes us right to premium. Any buying here is premium. And it taps right into discount, 50%. 50%. The discount is letting us know we have a bullish fair value gap here, blue. And we come into discount, tap, after a liquidity sweep. So where can we anticipate price to go? We break higher, new break of structure. Let me just delete this. It's too much noise. All right. We break this high right here. We close above, break a structure. We still didn't sweep the highs yet. And then we get another fair value gap right here. And this one holds as well. Right. So we get another fair value gap. This right here looks like just a more actionable signal, kind of like a 2-2. This is a 3-2 reversal, right? This is a 2-3, 3-1-2. And then this trend line bull flag. All right. Composition of a bull flag, lower highs. Right. These are all lower lows. And then if you trade ICT, what did I say? We get some type of sweep into a fair value gap. Let's take a look in the 1 minute, how this looks like on the 1 minute, right? We get a 2-2 reversal. Then we break trend line and we go for the highs. And guess what? We have highs above us that still haven't been taken out yet, right? And so we move, continue to move, we pull back. And if you're in a bullish trend, we should expect these to hold. Boom, right here, right? Holding, holding, bull flag again, lower highs, lower lows, sweep, and that takes us to our target. So if you're having trouble with how to enter trades, or you feel like you missed the boat, wait for price to come back, right? Look at this price is leaving without you, right? It's leaving without you, and you know that this is the target. So sometimes you may know where price is gonna go, but it may not be the right time. You may know where the price is gonna go. You enter right here, and it pulls back, stops you out. But guess what? It was waiting to sweep here first in order to finally take out this high up here. We did take out this high. That's why we rejected hard. We held this. And once we make our higher lows, there's no reason to come back down here already because we swept. So if we do hold, then you should anticipate that if you trade the strat, this is called a PMG, right? Pivot machine gun, where 2 candles, 1 candle, 2 candles usually takes out a lot of liquidity. Liquidity here, liquidity here. And when I say liquidity, it just means like swing highs, swing lows, right? This is liquidity, this is liquidity, this is liquidity. So this one took it all out. So there's nothing left down here to take unless we go down here. This is too far. Maybe down here, maybe down here, and then down here. So these are swing lows, liquidity. But once this liquidity has been taken, we have clear targets up here, all this liquidity, and we go straight to it. You guys see that? So wait for price to come back and wait for that sweep. And this is actually called a turtle soup. So if you trade the ICT, it's called a turtle soup. So you have liquidity inside some type of fair value gap or order block, and we wait for price to sweep inside there. And usually at a higher percentage, you would want it to return to equilibrium, the 50 fib, or just 50% of the range, discount, whatever you want to call it. This is what you want to look for. But if you're late, right? If you're late, this is 50% for a sniper entry. Just know that when we make our higher low, do we have targets? You have to look left. Do we have targets? If we do, then it's okay to enter here, because if you have fair value gaps, then they should be your support. So if I have a fair value gap here, that should be my support, right? If I have a fair value gap down here, this could also be my support. So if I were to enter off of this 2-2 reversal, let's say I entered a little bit late, I entered right here, my stop loss would have to be either below this fair value gap or below both of them. And if my target is this liquidity right here, does it give you better than a 2-to-1 risk to reward ratio? 55 points, better than a 1-to-1, then you have a higher chance of winning, right? Let's say you enter right here. No, so that means you would have to move your stop loss higher because you need to maintain a good risk to reward ratio if you want to play or trade long term. Okay, let's see what happened right after. I think we kind of kept pushing up, right? Kept pushing up. But at the same time, right? At the same time, this is happening. Let me just delete all this because hopefully you guys understood this. At the same time this is happening, let's move it back to the 5 minutes. This target hasn't been hit yet, but what am I looking for at the same time? This is, let me just try to see if, okay. Okay, so this was another indicator for me why we were going to go completely crazy. Okay, so when price was like right here, this is the 5 minutes on NQ, so QQQ if you trade options. And we have on the right side is ES, which is SPY. Right here shows me that we had liquidity here that was not taken out yet. We had liquidity here that was taken out. This got taken out. We dumped, right? We had a double top. We dumped. What do we bounce? Do we bounce into some type of support? This is the 30 minutes, remember? So we had a 30-minute fair value gap right here on ES. Did we soup it? That's called turtle soup, right? Did we soup? Did we soup it? We souped it. So if we souped it, where should we expect price to go, up or down? We took care of liquidity. All this liquidity, we souped it, made a higher low into some type of fair value gap. Sometimes it doesn't hold just as clearly because there's also order blocks, right? If we have an order block down here, this is considered an order block. Some type of support. Higher low, we swept and then we made a higher low. Do we have liquidity here? Yes. This is 30 minutes right here, right? So this is another fair value gap right here. So I was watching ES knowing that we have so much liquidity here. Even this is liquidity. And then the external one all the way up here. All right, let me just delete this one so it doesn't confuse you. This is what I'm looking at. Does this look bullish or bearish? So yes, NQ can dump right here, but as long as we're above here, this is bullish above the weekly open, and we're in a bullish fair value gap on 30 minutes. Look at this 30-minute candle now. Look at this 30-minute candle. This is a hammer, right? We came down, souped it again. Anytime you see some type of sweep inside of fair value gap, is letting us know that this could change direction, right? A liquidity sweep changes price direction. So we got soup again. We held above this 30-minute fair value gap. And I'm watching right here is we're building up, respecting this fair value gap on the 5 minutes on NQ. And look at this. It's just we go straight to the highs, right? NQs was a little slower. NQ was a little slower to make it. So if you're in this position, you see this hit it and we're holding, then I would expect this to keep going. But if we hit this and reject it, this is called an SMT divergence. Remember what I talked about last time with the SMT divergence? Is if we have a high, a double top, we have this on ES, but on NQ, does not take out the high, then price doesn't need a sweep here in order to change direction. So we could dump here because we already took out the target here, right? We have a high right here, we took it out. We have a high right here, NQ is lower, right? A lower high. This is the divergence, so you can take it from right here too. This is lower than over here. This is higher. This is the divergence, SMT. that was happening. But what gave me the confidence to stay in that trade is that I'm watching right here as this is happening. Does this hold? If this just turns into a huge wick and you see this turn like a red two up is an evening star, right? 2-2 reversal, then I would immediately get out. But watching this, it was holding on the right side, still holding. Look at this. This is super bullish right here. SPY was ripping. So I would expect us to get another soup right here. So can we soup this? If not, if we come a little lower, can we soup this? If we come down lower, that doesn't mean that the bullish bias is over yet. So if we have this right here, if we come out lower and we can soup this, then this is a possibility, right? Because yes, we could break this bullish fair value gap, but that just means that we can come sweep this one. That's a possibility. So you're trying to come up with this narrative in your head that if this happens, can we hold? And I think did we hold? Oh, this is the end of the day, huh? This is the end of the day. Okay. I guess this is the end of the day. Yeah, so right now this is where we're at. I think in real time though, after hours, we'll be doing something different, but this is basically letting us know that we swept here on ES, but we didn't sweep on here. So that is the divergence, which means that if we do displace down now, going into tomorrow, if we do displace down, that means we what? We inversed this bullish fair value gap. And if we hold below it, then we look for a soup, a sweep here in order to continue the trend down. If this holds, for example, right? Obviously you need volume, but that's letting us know that we don't have to come up here anymore because ES came up here. But if ES just bounces and just starts ripping, then I would expect price to just make higher highs, okay? Does that make sense? Hope I didn't overload you guys, but I just want to give you guys an example of what I look for during the market as it's happening. And all this, like this is difficult because a lot of times price seems so slow. It's choppy, it's choppy, it's choppy. But if you just wait for a sweep and we see a higher low, even if you're midway here, you guys see, did everything that needed to happen down here happen in order for price to continue to move in the direction you wanted to? If the answer is yes, then you can look for a smaller time frame. If this 5 minutes is not good for you, you can go to the 1 minute. You can go to the 15 seconds. But you need to have the bias on a bigger time frame first in order for you to do that. So yeah, that's the one thing I wanted to share with you guys today. You guys have any questions? Here, guys, feel free to unmute yourselves as well. All right, this is happening right now, though. So we had SMT, which is a bearish divergence. Let's see if price wants to disrespect bullish fair value ups going into tomorrow. All right, we kind of did so right now. And then we have this one down here. So price continues to push down. What do? We look for a lower high to take us to liquidity somewhere. Bang, bang. Yeah, man, you're welcome. You are welcome. Let's see. All right. So look at this candle right now. The reason why I don't think just straight bearish yet is because if you go to the weekly, it's just a doji. Just a doji. But the reason why I'm looking for higher lows, if you go to the monthly, look at that. Do we have liquidity? We have liquidity here, potentially. We go to the 3 months, right? It looks super bullish. And it's an inside bar, right? It's inside the highs of the previous candle. It's a 1. But let's take a look at the 3 months over here. We already swept. Monthly over here, we already swept. And that's the SMT divergence I was talking about. So now we wait for a catalyst. So if there's some type of news this week, I think there's a red folder news. Could that propel price even higher? And if price is all-time highs, guys, just know that that's the hardest to trade. So it's okay to sit out days if we just rip up. If price just rips up like this, You don't know what to do, just wait for some type of corrective activity, and then you can look for the soups, which are the sweeps, sell side sweeps, in order to continue this bullish uptrend. Okay, but that's all I have for you guys today. I hope you guys enjoyed the class. Like, you guys don't have anything else. I guess that's it.
That was good. Do you think it's going to still sweep on NQ? Because it's pretty close. Or do you think it's going to switch direction since SPY swept it?
That is that's
What's
where
your,
we leave it up to what happens overnight.
okay.
Because right now, if we do like right now, we're kind of like in the middle.
Yeah.
This is the hourly. Let's see the hourly here. We are kind of in the middle. So it really depends because right here we don't really have targets here. So we might be ranging tomorrow unless we have news. It looks like it wants to create some type of liquidity, right? In order to break higher. I don't know. But I think we need candles now to form because we swept and there's no more structure. We have to wait for candles like this. You see this? In order to create liquidity for a price to go attack. But right now we have nothing left to attack because we just made all-time highs.
Yeah.
We just made all-time highs with SPY. So there's no more targets to the upside. So that means we have to either come down or if we keep ripping, we're probably gonna chop one of these days. I don't know what day it is, but there's no more targets here. For here, NQ, there are targets. There are targets here, 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 here. And so if we do come down, it would be easier to trade NQ than ES. So that's my opinion. But that's why I said like you guys can take like this strategy, you guys can back test, you guys can just try to identify where your target's gonna be and we'll find out tomorrow. So yeah, I don't want this video to be too long, but I will upload this. I'll probably put this on my YouTube channel. So you guys can rewatch it if you guys missed some things.
Thank you.
Yep, yep. All right, guys. That is it. Everybody have a great night and good luck trading tomorrow.